Hello, everybody, and welcome to the Big 5-0, episode 50 of the Seller Club podcast. And we have a very special edition for you today. So before we get into that, let's drop that beat. All right, everybody. How are you guys doing? We have some extra people in the clubhouse today.
Glenn, how are you?
Doing good. We're ready.
Oh, he's ready. You know he's ready. He's ready for this one because we are getting ahead, right? That's the goal. We want to get ahead and we want to be ready. And because of the season, Anna, explain how we're doing this today.
Well, as some of you may know, if you're listening to this episode when it drops, it's a very spooky occasion here this week. And so we have a special edition, semi-spooky episode for you. And it's all about the scary issues around our taxes. So we have our special guest, Kevin Reeth from Seller Ledger, who is here to assuage our fears about taxes. Like a one-man Scooby-Doo gang, he is going to pull the masks off of all of the neighborhood villains and help us out. So, Kevin, thanks for being here. Are you excited to bust some myths and rip some masks off some villains?
I am indeed. Thanks for having me.
I'm so glad. Well, we've been trying to think about and discuss with you about kind of what are the big scary things around taxes that are freaking sellers out even now as they, imagine their life in April of next year. And so we're going to go through some of those one by one and just let you speak some truth to us about it. I think it's going to help a lot.
Sounds great.
And also Q4 is here, so everybody should be making way more during this quarter. And
yeah.
Don't forget, you owe taxes.
Don't forget.
I just paid quarterly. And so
good for you. Good for
I know,
you.
so this is, when I read the outline, this is very spooky, actually.
Oh,
it just sent shivers down my spine reading these. So
wait. What Glenn's saying, taxes this year is going to be bad because this guy sold a lot.
Yeah, I've been putting money aside all year, and I know it's going to be, oh man, I don't even know what to expect for this one.
You got this, bro. We got this. we got Seller Ledger, so we'll be able to maximize all the deductions.
Okay, got it.
That's right. Well, are you guys ready to get into the first one?
Let's do it.
I'm pumped.
Kevin, are you ready?
Let's
are
do
you
it.
ready?
So let's start with something that's kind of at the beginning, whether you're at the beginning of preparing your taxes or you're at the beginning of selling stuff on eBay or selling stuff online. Something that's been a hot topic this year, even in Congress and elsewhere, is the 1099K. So this could be, a scary topic for some sellers who haven't gotten a 1099K before, who don't even know what those are, who don't know what to do with them if they get one, or like what the purpose of them is. So I just want to throw that one at you first. Like, let's talk about that. Maybe getting one for the first time. Like, the government sent me a tax, or someone sent me a tax form that I have to show to the government. Maybe, right? What do I do with this?
Yeah, so it's a great question because there's been a lot of chatter about it. And in fact, they were supposed to lower the threshold a couple of years ago to send it out to anybody who made $600 or more, sold $600 or more, whether you made profit or not. The IRS pushed that out a couple of times. Now they're talking about they'll only send it out to people who've sold $5,000 or more. But that's still a lot more than people have had.
Yeah.
But one thing that's really important to remember is these 1099Ks, they're not new. They've been around for more than a decade. It's just a question of who's going to get them. And so I think it's more the small sellers maybe being a little concerned that, the IRS is going to get this and it's going to cause more trouble. But the law has been, if you make any material amount of profit, even in the hundreds or thousands, you really should be reporting that on your tax return anyway. So there should be no change in behavior for any seller out there if they're following the rules and doing that. So there's some confusion about what's actually in the 1099K, especially around sales of personal items or consignment or things like that.
Right.
So that can get maybe a little confusing, but if you're organized and you have your numbers kind of added up properly and tabulated, you're going to be fine. So it's something, there's a lot of concern about it, but it's probably, in my opinion, overblown.
Yeah, I think one of the things that throws people off is like, what does the number mean, right? And like you just said, it's your gross sales, right? It's not your profit. There's no way for them to know, like, for example, what you paid for that item or if it's a personal item or not. So you don't automatically have to go, oh no, according to them, like, I've made this as profit. Like, there's actually ways to account for that and show that, no, that wasn't profit. It was a sale, but it wasn't profit, which sadly, we all probably know what that feels like, to make a sale, but not profit, right? It's a sad reality at times.
And again, the IRS has been receiving these for more than a decade from much larger sellers across many channels with lots of different deductions and scenarios. So they're going to be pretty familiar with, whatever numbers you submit on your tax return. They have an idea of some of the examples of where numbers can be a little bit different than what gets reported. So, yeah.
So if we get one, we shouldn't throw it in the trash or throw it in
Definitely
our
not.
computer digital trash. We should hang on to it, probably, but we don't have to be scared of it. That's what I'm hearing.
Yes, 100%. No need to be afraid.
Awesome.
So one other question. Let's say you don't hit the threshold. What should we do, right? For somebody, because it's very unclear which one, right?
5,
like what if they're selling under 600 or under 5,000 and they don't hit the threshold of the platform, right? Because different platforms have different rules. I have experienced way before, early on, reselling with Goat app. We had to manually track it. They didn't send us 1099 because it didn't hit the 200 transactions. And for them, the transactions was actually not sale. The transactions was actually withdrawal. So if there's no way you could withdraw 200 times in a year to hit a threshold that they would do that. So how should we do that? Or if we're selling on a platform that doesn't give us 1099, what are your tips on how we could track that?
Yeah, so that's a great question. In fact, I would argue that the best approach you can take is ignore 1099s completely for your own purposes. You should be tracking all of your sales from every platform, any source of income, as well as all of your deductions. So whether you're pencil and paper or spreadsheets or software like ours, act like a business owner who wants to answer, kind of like we talked about in a previous podcast. How much money did you make on your business? If you can answer that accurately, you have everything you need to file a tax return.
Right.
And I think especially it's probably going to serve you well to be filing these returns, your Schedule C, the profit and loss from business, even before the IRS gets some 1099Ks for you. Because if you grow over time and all of a sudden, whether the threshold lowers or you grow and you exceed it, now you show up and they're going to have a track record of, they've been filing, their profit and loss at smaller amounts for years. This seems like an honest taxpayer to me.
Yeah, they didn't come out of nowhere.
Right, with a really big 1099K number one year.
Yeah, because the platform sent them a 1099K, now they report it.
Right, all of a sudden, this is the first time we've seen this from this person.
Yeah.
Okay. You're safe, Glenn, you're safe.
Yeah. I will say I'm also hearing the undercurrent of like, be organized. And I know that not everybody is naturally super organized on their own. But again, like, of course, that's why we love Seller Ledger, because it takes like so much of the challenge of being organized out of the equation, and you still end up getting to be organized on the other side of it. So
yep, I like that. Because
I love organization, and I still love not having to be constantly challenged to maintain my organization.
I have to say I'm the least disorganized of the host podcasters here. Glenn and Anna are really good with their spreadsheet, but now I'm there with them because I can tell them what my gross income for the year is, because I literally have Seller Ledger open right now. So how about that?
Would you like to share your numbers, Ken? So how about that?
No, because
that's for a different podcast. Yeah, that's a different.
IRS are listening.
Yeah. I have another question for Kevin, so I'm gonna barge ahead with it just because it's related. Like we were kind of already touching on it with 1099K, but The sale of personal items, that's another thing that I feel like is confusing. Those items do get included in your 1099K. The platform doesn't differentiate that for you, like what was your personal item and what was your business inventory item. So how do we handle that? Like how can we make sure that we're not paying taxes on the sale of our personal items? And is that a really complicated, horrible process? What is that like? How do we take care of that?
Yeah, it's one that sounds horrible, and it's really not. And this is one where if you go and Google with IRS instructions for 1099Ks, and I think it's actually on their frequently asked questions website, what do you do? They actually spell it out specifically. And basically there's one rule, which is you can't declare a loss on the sale of personal items. So you can't write it off against other business stuff, but you don't pay any taxes on it. And the way they do that is actually in your 1040, your personal tax return, there's an option to file what's called a Schedule 1. You can also do it as like using capital gains, but I think that's more complex than it needs to be. But there's actually, if you go to, and you can Google this as well, or we have a blog post where we explain this. Under Schedule 1, there's an income section and there's an expense section. And if you go down, under other income, you can list all of your personal sales there, or under, and I should say, under other adjustments under expenses, you write it off. So their guidance is actually pretty clear. And I think they use examples of, selling a refrigerator or something like that, right? Where whatever you sold it for, you basically claim that exact amount as an adjustment under expenses. And that makes sure that no profit is declared on the sale of that personal item. So let's say you sell a few $1,000s out of all of your online sales, you sell a few $1,000s of personal items. You just want to take that exact total of what you sold in personal items and put it under an adjustment on the Schedule 1. So it's pretty straightforward.
There you go. So am I correct that it's break even, correct?
Yes.
They they make you show I broke even on this, or
right. You don't want to show a profit, and they won't let you show a loss. So it's like, nope, it is.
Break even.
Break even is the only answer that works.
Sounds like a compromise. Yeah, right. Well, that's great. I'm glad that that's actually a really straightforward one. And you mentioned to us before you have a whole blog post about this to make it even more straightforward and easy. So we're going to drop a link to that in our show notes. I think there will definitely be some people who want to go and follow up and read about that, because I know, like, for myself, I sell really miscellaneous inventory. I actually started my store by finding 100 things around my house to sell, my house and my office. But, I was like amazed at how many, all of those, first couple months of sales were my personal items. And I did not adjust for them either, because I didn't know about this 7 years ago. But I do think it's really interesting. And I definitely, throw some of my own items in when I'm cleaning out my closet or whatever sometimes. So that's really good to do. That's something I might actually do myself this year that I've never really trifled with before, because it doesn't sound as intimidating as I thought it would. So
right on.
Appreciate that. Okay, well, I will stop talking. I'm always full of questions, but thanks for letting me kick off the first couple, and I'm sure we have some more for you.
Oh yeah. So I did sell a couple of some sneakers I didn't really wear anymore. So Ken, I sold like some Jordan 5s and had to let go of some of the personals,
It's like, are there any hearts breaking right now? I don't hear any,
a little bit, but thinking about it, I was like, they're unworn. I mean, I've only worn them like twice, and I was like, they're just sitting there. So gotta let the personal items go from time to time, especially when they're worth some decent stuff. So good little notes there. But let's say, have different expenses and different things going on. But what if I put an expense in a wrong category? Then what happens?
Yeah, so this is another one we
get
a lot. Well, yes. No. Now, we get people asking this pretty often because they want to make sure like they do everything right. And the IRS, they provide some pretty good guidance on the instructions for your Schedule C on where to put stuff, but it doesn't get super specific. My opinion on this is, at the end of the day, as long as it doesn't change your gross profit, it doesn't really matter. Now, there are going to be situations where if you put it in, for example, too much stuff in cost of goods sold, which on the Schedule C is kind of deducted at the top level to show you your gross profit. That's different than kind of your other operating expenses down below. And so much of how the IRS operates is with automated software that is detecting kind of ratios and changes year to year. It's possible, in theory, that you could raise a flag there. But as long as it's a legitimate expense and, the difference, especially, in the expenses part of the Schedule C, if you get it wrong, maybe you'll get a question about it and then you can change it going forward. But it's, that's not probably where you should worry. Where you should worry is if you're trying to get away with something you shouldn't.
Yes. Well, and for my fellow Hermione Grangers out there who are certainly not trying to get away with anything nefarious, we just want to do everything perfectly right. Is it a good idea to basically think about our expenses, even through the year, as we're accruing these expenses? Is it good to think about them in terms of that Schedule C, already thinking, okay, this was an expense for my business. Where would I categorize this? And maybe in some cases, there's a couple of different options, right? There's a couple of places where it might reasonably fit, but if we can kind of have a logical ballpark estimate of where this would go, we're probably safe. Make all of the Hermione Grangers feel better.
Yeah, and I think you can, look at prior tax returns. So I think one of the biggest challenges is remembering all of the different write-offs year to year.
Yeah.
And a lot of this, especially for people, if you don't have a CPA or somebody who's kind of keeping tabs on this and advising you, looking at what you filed before, but also talking with other sellers on what they do. And again, this is all from the perspective of, not trying to find ways to cheat on your taxes, but there are so many deductions that just get missed because we're all busy. Right?
Yep.
We're selling, we're sourcing, we're trying to do all of this stuff. And thinking about tax deductions in May and June and September is just not a priority. So there are things, you can do looking at other sources of data and just trying to learn from others. Oh yeah, that just as a reminder, or, build, like you said, write in some reminders for yourself on, I have to remember to think about these deductions.
Yeah. And I know one of Ken's favorite things, we've talked about this before on the podcast, one of his favorite things about Seller Ledger is how it remembers what transactions or what type of expenses usually, and assumes, okay, this is always going to be an inventory expense. Mm-hmm. This is always going to be whatever, shipping supplies or, office supplies or something like that. And I do think that helps take the guesswork out too, because I used to do all of this manually before I had Seller Ledger. I would use a different online software and have to go categorize all my expenses all the time. Right. And I would always be looking back, even let me look back at last month and see, how did I categorize this last month? Because I know that it could make logical sense in a couple different categories, but I don't want to get it wrong, or I don't want to be inconsistent. When I total it up at the end of the year, I want it to be accurate and not have it split between two categories, right? You want real solid totals. So
I think that's really, going back to what I love about the software Seller Ledger. I actually have it open right now, and because we were out of town and I went to Pete's Coffee, $30.36. I don't know what I bought, but that was a lot. It says travel deductible meals on the category. I said, that's right. And then, and then I just hit update, apply to similar transaction, because we don't have Pete's Coffee in Cincinnati.
Yeah.
I think we do, but I don't go, right? Because I'm here. So I update it, and it pretty much sorts everything. So there you go. That easy. So, Glenn,
that is.
You know what I'm saying? I don't have to do the writing in the paper kind of thing.
Exactly. So next time we go out of town, you're saying that you're paying. Is that what you're saying?
Yes.
Oh, well,
Only
you are,
because
you have the
100%
most
write-offs
deductible.
again.
We need to deduct a lot from your income.
Oh, okay.
Yeah.
Okay.
You have to go out of town.
I need to go out of town.
Yeah,
okay. All right, makes sense. So I guess when it comes to the expense on the wrong category, what's the best way to stay safe in that case?
Honestly, I wouldn't worry about it too much. So I think you can do, and our software, for example, when you go in and you see the Schedule C that kind of updates itself as you use the software, you can mouse over every single category, every line, and it'll give you the IRS instructions, right?
Whoa.
So, that's a little bit of guidance, but most of the questions that we get, a lot of expenses, it's pretty obvious where to put them.
Right.
But there's a few like, oh, does this go under, other expense, or should it go under, office expense? And, where does shipping go and things like that? At the end of the day, I wouldn't worry about it too much. It's more important to make sure you capture all of it and you tabulate it correctly.
Yeah. Yeah, I like that, because capturing it all, right? That's the goal, so that you'll be able to kind of deduct it, right? Because like the little here and there expense adds up a lot over time, and I feel like when I'm, as a person, not organized, I usually just go over my my flights, my hotels,
the big stuff.
just the big stuff. But now looking at the software right now, I'm paying $1 for Apple storage every month. So office expense, that's $12, right? Like I don't have
like
to
half
pay.
a business meal.
Yeah,
Ken.
and then so I think that's really cool. And if you're not hyper organized, I'm not saying I'm not organized. Anna and Glenn are just hyper organized, and they deduct everything. But I think like I just spend random stuff too, because especially when I'm out of town, I have DoorDash, and I don't DoorDash at home. I only DoorDash out of town. So travel. It really says it here. It does it for me, and it's just like, okay, all DoorDash is deductible meals that I'm traveling out of town. Apply to all similar transaction. I'm actually doing work as we're podcasting right now, and I just hit update that thing, and it updates everything.
Talk about an actionable step.
Yeah,
It's
exactly.
Taking action in the moment.
Yeah.
That's
and
really
then-
good, though. This is kind of a Q4 checklist episode, so we want actionable, so that's great. Good
I
job,
like that.
Ken.
I like that. Yeah, because I even have like other stuff. Dunkin' Donuts, it says uncategorized. No, we gotta change that right now. I gotta say that's travel deductible meals, because I don't take Dunkin' Donuts, and it says apply the total transaction. Update right now. So
But Ken, let's just say, for the sake of this conversation about expenses, let's just say at Dunkin' Donuts you were buying K-Cups for your office. Then that could be an office supply. And
It
guess what?
is.
It would still be okay, because
yeah.
you could categorize it either way, and the IRS will not come get you for it, probably.
I like that. See that, Glenn? So now you gotta get some Dunkin'
Glenn
Donuts.
just wants to know how to categorize the Lambo, right?
Oh yeah, that's for later. That's for
Where does
other
that go?
Q&A.
Very Korean.
It's for off the record Q&A.
Yeah,
Up the record.
exactly.
Yeah. There you go. I think that was pretty good. Don't worry about it too much, and as long as it's not, you're not cheating, or you're not trying to like get away with stuff, you'll be fine. So I think we're down to the biggest and the baddest spooky word.
The ghoul of them all.
It is the goal of them all.
And I don't think
It's like the Grim Reaper, actually.
I don't think we have experienced, us three, this, because we're pretty good. I think, as a matter of fact, we're probably under reporting our expenses. That way, if we over expense it, and that could be means of getting the bad word, audited.
Ooh,
Right,
the scariest word.
So this is,
The
and I
A-word.
started it with that phrase because that phrase is actually wrong. We shouldn't be scared to put everything that we need to be allowed to write off. But I feel like there's like a stigma. It's like, oh, you gotta leave some out, because if you're writing off too much,
Yeah, if you're
then
greedy.
it could trigger like
Yeah.
the IRS auditing you. But now, like, looking
Yeah.
back at it, like, no, like, that is our right as a business owner. If it's an actual business expense, we should be able to write it
Yeah, being
off.
accurate is not being greedy.
Right, but that's kind of like the stigma, right? It's like, oh, like, man, you're writing off too much. And I feel like that's kind of like, the evil bee and the angel bee in the back of my head, like, oh, you need to write everything off. It's like, oh, don't write everything too much, because, like, there are times that I buy a lot of equipment. There are years that I upgrade my office, and there are years that I don't. And so, is it really that bad? Kevin, tell me, like, is it really that spooky? Give me some facts to calm me down with with the fact that I could be audited?
Certainly. So I'll do my best to remove the spookiness.
Okay,
Let's
there you
say.
go.
So the first thing is, and I know a lot of this got a lot of play over the last couple of years with the Inflation Reduction Act and the fact that an extra $80 billion was allocated for the IRS to go after people, right? But the reality is if you make less than like $500,000 a year, the odds of getting audited at all are between 0.2% and 0.4%.
Is this make sales or profit?
There's just the likelihood, the number of tax returns that get filed, the odds of you getting audited, and it's, I don't know I think it's on profit.
Profit, yeah.
Of the $500,000.
Yeah, probably the taxable.
The taxable
income,
the
right?
taxable
Yes.
income. Yeah.
That's what I
So-
would think.
Yeah. So the other thing that's interesting is if you go back and read the documentation and the law when they increased funding, the purpose, their stated intent is to go after people who make more money than that. So
Yeah.
I think the first thing for small sellers is, the odds of them coming after you are already pretty small. The other thing to keep in mind is for years, staffing at the IRS has decreased relative
Yeah.
to the total number of people. And that's, part of what they've been doing is relying more on software to
Computers to do it,
detect.
yeah.
And so they're looking at the math year over year, they're looking at the different categories to try and find anomalies, right? To just kind of raise a flag. So if you're not doing some really strange stuff, the odds that you're going to pop up on their radar is pretty small.
Because of like the software detecting Ken was in this threshold last year and all of a sudden he spiked so high or went down too low. Is that kind of like what the software does?
Yeah, well, I can't say definitively since I don't work for the IRS.
Right.
But everything I've read and experienced personally and through different professional organizations, it's basically looking for anomalies in patterns.
Anomalies.
Right. If
There you go.
something falls within the proper range, it's like that seems reasonable because they don't.
Right.
They just don't have the resources to read through every possible tax
Right.
return.
It'd be impossible. Right.
Right. So they're running the numbers through software. Software is trying to find patterns and detect, things like that. So, and it gets back to something you said earlier. It's like, if you're not cheating, don't worry about it. And then the other thing I would say about this is, large corporations have entire teams of people who have been trained specifically to write off every possible deduction, take advantage of everything that's allowable in the law.
Right. For tax breaks or all that
Right.
stuff.
But as small business owners, we don't necessarily have those. Right. We don't have that team. But that doesn't mean that, putting in time and effort to get organized, to learn as much as you can, and to take every allowable deduction, you should absolutely do that. It is your right. So just, we come on and we talk about, don't cheat. We should all be paying our fair share. We should be following the letter of the law, but we should also claim every possible deduction we're entitled to.
There you go. So now, it just turned my being worried about being audited to now being more courageous about going after every deduction I can.
Excellent.
That's a big takeaway of that. So just in case we get audited, how painful is an audit?
Yeah, so that's another great question. And I think for so many people, and I'm guessing like TV and movies have something to do with this. There's this
They
vision
knock on
of,
my door.
right, they're going to knock on your door. They're going to
With a
walk in.
SWAT team.
They're going to push you to the side. They're going to grab all of your files and they're going to rifle through them, right? And they're going to come in and they're going to take over, and you're just hosed. But did you know that 85% of all audits, they're called what's known as correspondence audit. You're going to get a letter in the mail that basically says, hey, this tax return, we came up with different numbers than you did. you have an opportunity to explain. And we'll do this by mail. Send in some supporting documentation. And I know you said not having experience with this, but I've actually had this happen personally and through other organizations been involved with. It's not at all scary. There have been cases where I got the math wrong, right? It's just again, in TurboTax or something like that, I typed in the wrong number and I went back and I looked at a form I received and I said, oh, I typed it in wrong.
Oh,
my bad.
User error.
Right.
Yeah.
Exactly. And then you're like, oh, that was my error. Had another case where one of the forms they never got a copy of. And when I submitted that form, they replied and said, oh, you know what? You're right. Don't worry about it. No extra taxes owed. But 85% of the time, it's going to get resolved by the mail. It's mostly just, please explain your numbers. Maybe you'll disagree. In my personal experience, it's been pretty clear whose error it was, and you just correspond and you resolve it. So, the kind of stuff that we watch, in movies and on TV, it doesn't really happen that often in real life. So
yeah, those are like
It's not gonna be a
FBI raid
Watergate
because
moment.
you're money laundering.
yeah, exactly.
It's more like a federal crime, international crimes and stuff like that. So that's a really good explanation. That, I mean, really, are you gonna get scared of a letter, right? You actually have an opportunity to prove it, right? Whether IRS is wrong or if it's your fault, you have a proof, just a clarity. And then it goes back to, if you're organized, then you're be able to easily pull this data off of somewhere. Now, Kevin, if IRS says like, hey, Ken, like you ordered too much Pete's coffee and your travel expense went high, can I pull that data from Seller Ledger?
In terms of removing it and not claiming it as a deduction?
Or like, can I get the totals of like all this transaction?
Oh, like if you had to submit.
Right, if I had to submit,
documentation.
right? Like if IRS like sends me a letter, it's like, hey, can you prove this write-off?
100%.
What would be that's all I could do is just sort it there, print it, and here you go?
Yeah, exactly. In fact, every browser now, it's really easy to just print to a PDF file. So you
Yeah.
take whatever, you filter to the transactions you want to see, you print it to a PDF, you attach it, you can send it to the IRS.
Okay.
I think the other thing
Because
people will find...
I don't keep my receipts, right? Who keeps receipts? I mean, like maybe Anna does. I don't.
Yeah, so that does get
Pleading
into what constitutes proof, right?
Right.
Because it's pretty easy to create data in a piece of software that maybe looks official but isn't. So
Yeah.
when in doubt, I do recommend keeping receipts where possible, keeping bank statements, download
Or bank
PDF
statements,
copy.
right?
Yeah.
You can do bank statements. right?
Credit
Like,
cards, things like that. So you just want to keep as much as you can. The other thing I'll say is for those who do face an audit, whether it's correspondence or more detailed, when you deal with the average person at the IRS, they're really nice. They're just normal people like the rest of us trying to do their job. And really what they're looking at is software has told them that the numbers don't add up. They need to figure out how to explain that, right? So they're just doing a job just like,
Right.
you and I trying to make numbers make sense. They just want to make the numbers make sense. And so help them do that. And it doesn't have to be at all scary.
Well, I think we unveiled that bad word audit pretty well. That I think a big takeaway there is don't cheat and don't worry, and make sure you have some form of keeping track of all this stuff, that in case you get a letter in the mail and say like, hey, prove this, you can print off, again, bank statements or your accounting software stuff, or credit card statements and stuff like that. I think that's very good. That's probably one of the main reasons why I use certain credit cards for certain expense and certain debit card for certain expense. For me, all my travel goes to one credit card, so I just pull all of that, and that's actually pretty good. Now I am at ease.
Pretty streamlined.
Yeah.
Yeah, in fact, we do make that recommendation. Probably the number one thing when you talk about how to get organized, keep your business income and expenses in different accounts. It's a little bit more work, but if it ever comes to the point where you have to answer that question for somebody,
It's like,
to have it
it's
all
here,
in one place.
right?
Yes.
It's here. It's in this kind of like, it's separate folders, right? It's separate. I like that. I think that's a very good tip. And also too, there's a lot of benefits on doing that, because if you could accrue some credit card points and stuff like that.
Yep.
And organization. I think I like that. I like that a lot.
Yeah, I do too. I
Glenn,
think
anything
that's
else, Glenn?
a global takeaway. Be organized.
Do you want me to, it's kind of should I throw this random question in there?
Oh,
Yes.
throw it.
Okay, so I'm pretty much like, if you're doing a lot of this tax and you're answering a lot of tax questions, TikTok has probably messed up a lot of things, because there's a lot of things that go viral that people get hyped up on. One of them,
Including tax advice.
yes, exactly. Oh,
Wow.
that's like a totally different thing. One of
TikTok.
them
Yeah,
is
tax
a
TikTok.
viral video and videos of writing off a Mercedes G-Wagon.
Oh.
How does that come into play with like a 6,000-pound vehicle?
So it's not
That
a
was
a thing.
Lambo.
Yeah, it's
That was
not a
G-Wagon.
Lambo.
Okay.
And these type of things, and I feel like there was actually people that have made videos like they got in trouble for this too, because they didn't really know how to, well, not really in trouble, but they ended up having to overpay, turn into like a personal thing. They can't afford this car. It's like a $200,000 car.
Yeah.
How does this come into play when you're, I guess, a vehicle for business?
Yeah, so this is one where I'm not going to be able to give you a definitive answer because I'm not a CPA. I probably
okay.
should have prefaced that with the whole episode. But yes, so it is possible to write off very expensive vehicles for businesses. You just have to be able to prove that that is being used either exclusively for business, or you can use it with the standard mileage deduction and things like that. But my guess is most of these viral videos are trying to make it seem like you can write off a $200,000 vehicle that is not really needed for your business,
Yeah.
but try and get away with it. And I would advise against doing that. But that said, if you get into, there are definitely cases where, and especially, think about farmers, think about people in construction with very large, very expensive trucks and equipment.
Yeah.
They are absolutely legitimate business expenses, right? There are investments you need to make into your company to run it effectively. So there are cases where that is 100% valid.
Yeah.
My guess is the reason why they go viral is some of these tips are more, I don't even know if it's gray or if that's like, it's more charcoal in terms of gray area, right?
Because I've been familiar with that way back. I think I just looked it up. It's section 179. It's called like the G-Wagon expense, right?
Yeah.
Because a certain weight, right? A car or an SUV qualifies as a
there's
truck.
like specific criteria.
Because it's so heavy. And it's so funny, actually, certain car makers actually make their cars to actually hit that threshold for that people. So Glenn, for you, when you're selling hats, you just have to prove to the IRS that you're moving hundreds of thousands of hats, that you need a G-Wagon to haul your hats.
I feel like, if you know what, that's kind of bad though, is that, I go to the post office every day. And let's say I'm carrying all these boxes. Usually, like Whatnot on a Tuesday into Wednesday is like 128 boxes.
Okay.
I feel like you're buying this expensive car, and then
You're
I'm
putzing
just
back
really
and
gonna
forth to the
scratch
post
up
office.
like
I'm
I'm gonna scratch up the interior so much because of all these boxes. I feel like you're in. I mean, is it really an investment, or what? What would it even be at this point? Because you're using it for work. I mean,
if you have to repair it, Glenn, then it would be a business expense.
But Glenn, think about how cool you would look at the post office.
Exactly.
That's
the
true.
point.
Cool
That's
points, right? Like the cool points. I think that's what a lot of people try to sell. It's the glamour of having that. But I think that's a really cool explanation, Kevin. Like, if it's actually needed for the business, right? Because
Yeah.
I know a lot of people, I mean, YouTubers that are car builders, they actually buy these cars to make a series on. So it makes sense. Maybe early on, it was like, kind of like, whoa, like, why are you writing this off? But if you look at it, without the car, there's no business. Without the car, there's no YouTube. So,
Yeah.
Glenn, basically what we need to do is we need to be car builders and just start,
Changing the content.
changing the content. Yeah.
Yeah.
Okay.
I'm going to file. That was a good wrench, Glenn. Thanks for that wrench. I'm
Yeah.
going to file that one under, in our little checklist recap here, I'm filing that under don't cheat and don't worry, right? If it's, if it's
Okay.
legitimate business expense and it meets all the criteria, it should be pretty obvious. Both of those
Yeah.
things should be pretty obvious.
All right. Well, before we wrap up, Kevin, any other last words or any tips?
No, I think it comes back to, again, being organized. And it starts with separating your business from personal accounts as much as possible. Because then even if you don't use software like ours, if you're using spreadsheets, at the end of the year, you can go into, with online banking, you can go and get any of this data and pull it down and just have everything you need. And then again, it's not going to be top of mind throughout the year, but the more you can kind of check in on what you've done in prior years, and if you do have access to an accountant or bookkeeper with experience in e-commerce, just finding out what are some of those deductions that you just forget about, right? Like you said, when you look at your credit card statement or something, you're like, oh, that's right, I am spending on that. That is business related. And if you don't know, that's okay. You can leave it as uncategorized and go ask somebody, because it's worth trying to write off everything that is legitimate.
That is true. That is true. Well, this has been such a great episode, and if you guys want to check out Seller Ledger, make sure you click on the link below. They are a partner of this podcast, and I appreciate you, Kevin, for hopping on and debunking all this myth. And before we go, I'd like to just encourage everybody to make sure to follow us on Seller Club Podcast on Instagram, follow Seller Ledger on Instagram, and of course our other partner, eBay. Make sure you follow them at eBay for sellers. And if you have any other questions, make sure to DM us or DM Kevin. Message him at kevin@sellerledger.com if you have any questions. Make sure you try out their software.
For free.
For free, try it out for free. We have used it before we became partners. As soon as I saw the categorization feature, I was like, I'm in.
Yeah.
I'm in.
It was love at first Schedule C for me.
Oh, love at first Schedule C. That's a good. We gotta coin that. Thank you so much for listening, and let's keep in touch. And that is it for our episode Big 5-0. And we will see you in the next one. See you.
See you.
Bye.